Well, if you were hoping for another Bank of Canada rate drop, you got exactly what you were looking for today. For the 7th consecutive time, the BoC cut interest rates on the backs of the tariffs, job losses, and a lot of pressure from the outside influence. Tiff Macklem made the decision today to cut interest rates by 0.25%. Now, most Canadians are wondering, is this the bottom? Or in fact, I think most Canadians are actually wondering, how far down do rates go before we hit the actual bottom? So I'll break down exactly what that could look like for you as a borrower, as a buyer in the real estate market, and what are some of the factors that Tiff Macklem considered and the BoC when making this quarter-point decision to cut interest rates. So right off the bat, the BoC cut rates a quarter point. That brings the overnight lending rate today at 2.75%, which means now banks' prime rates are at 4.95%. If you have a variable rate mortgage, you know you probably have a discount or you're at prime. So if you have prime, then it's 4.95. If it's prime minus a half, it's 4.45% today. There has been constant pressure back and forth on almost a daily basis with news coming out as it relates to Trump's tariffs, Canada's retaliation, and back and forth and back and forth. The challenge associated with that is that now what that's doing is that's negatively impacting business investment in Canada and reducing consumer confidence. Because of that, there's a lot of potential negative impacts to the economy, which is part of the reason that the BoC decided to actually act quickly and cut rates today. Now, many suggested they could have just done a jumbo hike today or in April, but they opted to keep things steady on course with a quarter point, which is probably actually the right decision depending on who you talk to. And again, this brings us to our 7th consecutive rate cut. So we started the rate cycle at 5% and we're down already at 2.75%. Now, for history's sake, over the last 4 rate cycles, the average reduction from the peak to the bottom was 2.48%. So that means that we're probably going to see, if the average means anything, at least 1 or 2 more rate drops in this current cycle, if not withstanding any other issues that could arise with this constant back and forth battle from the Trump tariffs. With the Canadian retaliatory tariffs set to kick in on April 2nd, there continues to be a lot more uncertainty around the marketplace. Again, that's another reason that we likely saw the BoC cut interest rates today, forecasting for potential further issues down the line. Now let's talk about some of the data that was used in making this particular decision. The first one is inflation. Now, it's currently at 1.9%, close to the 2% target, which is right below the target for that matter, depending on who you talk to and what you're looking at. But again, because of the volatility due to the recent tariffs, and of course, remember, we just saw the GST tax break exemption go away, on and on and on with a variety of other external circumstances, it's very possible that we see inflation start to come back in a big way, if not factoring in the tariffs and what's going on with the back and forth, our own government's intervention and different tax breaks ending at this point right now. Now, unemployment is another key factor, and you could argue that this is probably one of the most impactful considerations from BoC when they were looking at making this decision today. Unemployment ticked up to 6.6%, with job growth stalling last month. That itself is an early sign of an economic slowdown, and again is another reminder that businesses are pulling back and not spending as much money on investing into the future, another poor sign for our overall economy. GDP growth itself was at 2.6% at the end of 2024, but now it's expected to have slowed down dramatically due to these trade tensions. Why again did the rate cut happen? Well, there's 2 primary considerations among many others that were factored into this big decision here today. The first one is the US tariffs and Trump's policies. Trump doubled down on his recent tariffs, which really escalated the trade war. We all know this. Beyond imposing the 25% tariff on nearly all Canadian goods and 10% on Canadian energy, businesses themselves, as I mentioned earlier, have essentially frozen investments and delayed any level of hiring. So Canadians are saving more money, spending less money, and while that might be good individually, it's not good news overall as it slows down the economy, and it could potentially lead to layoffs down the line. So essentially the BoC is getting ahead of it. Second consideration is that they're looking at the economic stability, which is basically, for all intents and purposes, a balancing act. The BoC's goal is to avoid a recession while keeping inflation under control. And that is a fine line because on one hand, reducing interest rates will hopefully stimulate growth, but at the same time, these tariffs could stimulate inflation. So again, this is a big part of their consideration of what they're looking at. So the question again is, how does this actually impact the mortgage market and the real estate market? And that's why you're here today. First things first, if you have a variable rate mortgage, you're going to see your payment or your interest getting reduced immediately. Reminder, adjustable rate mortgages see that payment drop. For every 100 grand, if you have a 25-year amortization, that's like almost $15 in that ballpark, depending on what your amortization is. In addition to that, you're going to see variable rate fixed payment mortgage holders see the amount of payments going towards principal increase and the amount of going to interest reduce. At this point, basically every variable or fixed payment variable rate holder should now be below that trigger point and paying down principal again, which is a welcome sign for all those folks who are basically paying interest and beyond interest in the infinity amortization for the last couple of years. A good sign that we're seeing those mortgages get paid down again. Future rate cuts themselves could be possible and they could be on the line. We've seen predictions from some suggesting that we could see 2% at the bottom, others saying we're going to stay on course with 2.5%. Obviously, this trade uncertainty is going to have a huge impact on where things actually go in the rate market in the near term. A reminder to all those asking about the fixed rate market, while we did see the bond yields react upon the news of the tariffs come in, it's been a bit of a roller coaster lately. And although we've seen fixed rates settle in the low 4s for the most part, and a couple in the high 3s for those insured mortgage borrowers, those who have less than 20% down on a purchase, we are seeing for the most part rates settle in that 4.25% to 4.75% range, depending on the term length, 1 to 5 years, variable rate. Now, what this does today is it makes variable rates potentially more enticing for many, but with fixed rates having already come down, they're probably basically on par at this point right now, which means if you have a variable rate mortgage, fixed rate mortgage rates should be almost the same, depending on what you're looking at. Now, the win is for those people who did take variable rates 3, 6, 12 months ago, who would have been locked in at rates in the high 4s or the 5s. They're seeing their variable rates actually bring them down below where the fixed rates would have been. So they're most likely rejoicing at this point right now, knowing that they're paying less. So what's next with the BOC and what can we expect? I mean, first and foremost, the next decision is on April 16th. And with the April 2nd deadline from Trump being right before that, it's very likely that we're going to have enough information and data to make a decision as to whether or not there's going to be a jumbo rate cut, no rate cut, or another quarter rate cut. The markets themselves are basically giving us about a 47% chance. So it's a 50-50 split, which is basically undecided as to whether or not we do see another rate cut in April. I guess we'll have to wait and see what happens. And if you pay attention to this channel, which you've subscribed to the videos, then you'll get all the updates every single week on what's exactly going on. Now, Canadian businesses and consumers are being cautious. I mentioned before, business investment is being stalled. So that could play into potential job growth as things go on. And the question mark around the real estate market is a really interesting one at this point right now. Short-term rate cuts could stimulate the economy as people reach out. They typically wait until after these rate decisions are made before they actually make the decision to go out and start purchasing real estate. Now, while that might not be the best decision for a lot of people because you're waiting until something happens and then everybody is basically jumping at the same time, there's still a lot of uncertainty in the air. One thing is for sure that I've noticed specifically over the last little bit, there's two different types of buyers that I'm seeing purchasing in this type of market. The one, interestingly enough, actually is younger buyers, first-time buyers, and those who are probably not paying attention to as much in the way of traditional media sources. A lot of those are still buying in this marketplace right now. If I were to look back at my last 10 clients who are purchasing real estate, crazy enough to say this, almost 70% of them are first-time buyers, which is typically not the case, particularly in my personal business. And then when I'm talking to different people in the marketplace, they're suggesting that that is a very common occurrence. The second being the move-up buyers. We've talked to many families who had been waiting and saving for the last number of years and now see the opportunity to move from that condo to the townhouse or the townhouse to the detached house as there's been a lot of supply in the marketplace. That has been a second consideration. Now, we have to be mindful of the fact that there's a lot of people out there who are uncertain of jobs, so those who are in industries that could be affected may not be making decisions right now, which is why you're seeing a very mixed market. Despite the mass media telling you that nothing is happening in the marketplace right now, we're seeing transactions happen all over the place. But what I am noticing is it is in pockets and areas. In fact, yesterday, a number of different agents told me that their properties were going into multiple offers. So it just shows that if a property is priced very well, it will still sell. And there are buyers out there, no matter what the media is saying about that factor alone. Basically, what should you do going forward right now? Well, if you're trying to make that fixed versus variable rate decision, remember that you should always consider the framework. I'll be posting a video soon again on making that fixed versus variable decision in this type of a market climate. But you shouldn't make a decision based on one rate cut. You should make a decision based on your personal strategy and the guidance of whoever it is that's helping you make that decision, not your Uncle Bob or that person who flipped a few homes. Understand the different questions around risk, your focus, what you're trying to do, and make sure that you're clear on where the market's going before you're making their decision. Too many people make decisions based on today's information or what could happen in 30 days and not what can happen in 3 to 5 years. So whether you're fixed or whether you're variable, either one's fine. Just make a decision based on what you're looking for. Either way, I hope you enjoyed this video. Make sure to hit that subscribe button and let me know if you found it useful.